Worley is a very well positioned company in the oil and gas space, and it's a very well managed company. But they are having some growth issues. It's a business that has expanded very quickly over the last 10 years. Some landmark or transformational mergers like Parsons, really saw the business grow very quickly across the globe. And that has presented them with some growth challenges, which I think they're addressing. But at the end of the day, it is a very well run, well-positioned company in the oil and gas space. Now, the challenges they've faced in recent years, other than some of these growth issues, really come down to the fact that they were over-earning in Australia a couple of years ago, particularly in the minerals sector. We've had the mining boom or the capital investment boom here in Australia. Worley were over-earning for a couple of years, and you could see their margins were at inflated levels. So their margins have drifted lower, and at the same time, the global capital investment cycle in the oil and gas sector has slowed materially. If you look at, everyone knows BHP and Rio and Anglo, those companies are spending less. But it's true also of Exxon and BP and Shell. Those large oil and gas companies are also rationing their capital programs. And so that means less money for the likes of Worley. So you've had two headwinds for the company: normalisation of their margins and also some slowing in the global capital cycle. Now we think those two trends have really played out now, and spending levels in the oil and gas sector have found a more sustainable level, particularly in areas that Worley are exposed to, like unconventional oil and gas, deep water Gulf of Mexico, and platform investment and these sorts of things, which Worley are very good at. So we think the revenue trends have stabilised for Worley, and the company now is priced at a far more attractive level than it was a couple of years ago when they were over-earning. So the last result was in line with their revised guidance. So they've been downgrading for some time as the margins have normalised. We've talked about. The last result was kind of in line with the revised guidance, which is the first sign that the business may have stabilised. They still have a lot of work to do to meet their full-year guidance in the second half, but we think there's plenty of scope for some disappointment there. Even if the business isn't recovering as quickly as some would expect, the stock now is priced at a much more attractive level. And so, we've allowed for some disappointment in that second half result and still think the stock's very cheap, given how well it's positioned in this unconventional oil and gas capital investment cycle, which we think will continue. So we haven't given up on the capital investment cycle, but to answer your question, bottom up, top down, Worley really is dependent on both trends. They need to do a lot of work internally to address some of these growth pains that I talked about, but also, they really are beholden to the global capital cycle in oil and gas spending. And we think, whilst it's moderated, it'll continue to grow in the single-digit levels. And they are well positioned there because most of that incremental investment is going into unconventional oil and gas, not just shale, but deep water and remote areas as well. They do have some strong competitive advantages, and these are the areas where they have strength in their engineering design. Deep water, in the deep water parts of the globe where they're exploring for oil and gas. In platform development, they are very strong in platform development. In pipeline area in North America particularly. Oil sands, which is another area where you have seen some slowing in the investment cycle, but we think that will pick up again. So these are niche areas where Worley have some real engineering strength. We're medium to long-term investors, so we'd expect over the next 2 or 3 years, if the oil and gas investment cycle does hold together, as we hope, then they'll address some of their teething issues, Worley, and they'll really exploit some of those opportunities in those niche engineering segments that we talked about.